Righto, money miners. One word we're not allowed to use on here, usually, champ.
Mate, I don't allow it.
Except when you're talking about the Axis Champ Ori. That is the only time we've got a new rule. Is that allowed to be let in?
I'm going to start a petition to rename it.
and the Champ Gyro.
Oh,
that's a big call, Trav, mate. You're going to have to make a decision right here. It's either your champ or the Axis Champ.
All right, champ, what do we got there?
Go Axis and go the Champ Gyro and the Champ Ori. What have we got today?
Well, I'm going to do a bit of a spiel on. There's a lot of analyst calls going on, Matty. I'm going to talk about some highlights from moments from calls with Amplats, Woodside, Lynas, and Whitehaven today.
Any heated ones?
Yeah, tense moments. Lots of tense moments.
Very, very good. When's the MinRes one?
Oh, it's got to be soon.
Oh, that's always some bloody fireworks in that. JD, what do you got for us, Sunshine?
Lynas, mate.
Lynas.
Quarterly out today. We're going to get into it in a bit. Trav will pay a couple of snippets from the quarterly, and then we'll get into the valuation. I think we've kind of spoken about the rare earths, the operations, those sides of things, but trying to get a better feel for the valuation.
Yeah, I'll go bloody Ora Banda's quarterly out today. I thought Ora Banda because it's all underground and stuff, but all I do is talk about fucking money.
I feel like that's what you do these days. You go to the cash flow, you're like, I'm a financial analyst now.
Yeah,
Look at my new skill set.
Completely forgot about bloody underground. So, sorry. I'm just sorry to insult the financial community and bloody Spartan's new updated resources out.
And Metals Acquisition Corp, mate.
Yeah.
Quarterly. It's a good quarter.
Mac quarterly. Oh, the old
quarter.
Spartan spark charts bloody flying.
Maybe I'll try and talk about mining.
Let's rip in. We've got heaps to talk about.
Right, take it away. Quarterly time. What are the bloody highlights?
Well, yeah, these are the calls. Every quarter we spend a lot of time listening to these calls, and it's even more frequent than every quarter because you got the half yearly and end of year results as well. So we're always listening to these calls, but every season there's some interesting ones there. And I thought I'd do a segment putting together some of the best moments from a few of the calls that have just sort of happened in the last few days there. They're mostly boring, but every now and again there's something pretty interesting there. So let's kick things away. I've got 4 companies here. The first one was from a call last night. It was with Amplats, right? And so
I stayed up for that one.
Yeah, did you? I was listening to it and I was walking my dog. Big quarter from them pursuing the demerger in the aftermath of the Anglo-American bid by BHP and Duncan's gold alone strategy. So they got like plenty of questions and on the call at the top, they kind of announced that that a proprietary platinum jewelry alloy had been developed by them using an alloy using AI, whatever that means, and they got a question about it. So I just thought I'd play it.
Then I don't know if Benny's on the line. Is he? Benny, would you like to comment on the alloy and the composition of the metal that's in the solution?
Yes, thank you, Craig, and hi, everybody. Hi, Leroy. I'm under strict guidance from my team, who's telling me that whoever I tell the composition of our alloy, I will have to kill afterwards. So I'm not going to do this here. So I am not in a position to tell you what it is. But Leroy, what I can tell you is your question specific on rhodium. No, there is not. Rhodium is not part of the mix. That's not.
Listen to this awkward silence coming up. Just waiting. No one's talking.
It's not only Morgan Stanley.
Next question.
Jesus Christ, go South Africa.
I thought
that is South Africa through and through. You will die.
I think he was trying to be funny, but it was so. Oh no, I was laughing anyway.
Given the benefit of the doubt, there's always a pause after as they patch in the new question.
Oh Jesus Christ! Fucking only in South Africa.
Second one, Woodside. So yesterday, Woodside announced that they were buying Tellurian. They got this LNG development asset in the US there. It's not a quarterly call. It was actually an M&A call, but I threw it in because
Driftwood, the subsidiary of it.
Exactly.
Driftwood.
Yeah.
That's American.
Yeah, it is. Yeah. So it's, the thing you got to know about Woodside is they need a 12% IRR for any LNG projects that they pursue to get the go ahead. And the analysts on the call were pretty skeptical that their 12% could be achieved without some lofty assumptions of a trading business uplift from Woodside. So I'll play that. Here's James Byrne from Citi querying Meg O'Neill.
Returns picking up what Nick just asked about. Now, if you're selling into, say, Asia, you might get a mid-12s slope, which at your $70 long-term assumption is just shy of $9. If we were to buy offtake out of the US, maybe we're doing that at a toll of, say, $240, $250. There's $250 of shipping. If we use, say, a low to mid-3s Henry Hub, we're getting to Asia at that same sort of mid-8s to high 8s delivered price. But those contract prices are incentivizing an infrastructure-like return for US LNG projects. Right, so how exactly does Woodside go from, say, an 8% IRR, like if I look at slide 12, model number 1 of the US projects, which in the current contract environment gets like an 8% IRR, how do we go from that 8% to more like a 12%, which you've reiterated today is your target return for LNG? Because at $900 a tonne, it's not like you're significantly more competitive than other US LNG projects that are proposed. Sourcing a gas supply, I would have thought you had a material benefit versus other sources of supply. Now, you've mentioned already flexibility and debottlenecking. I guess what I'm asking is, how can you help quantify those benefits that would take you from an infrastructure-like return all the way up to that 12% or more IRR?
Geez, he's done his homework.
Yeah, mate. He's well versed when you're an energy analyst. You know these things. It's like you're talking underground mining.
Right.
I'll cut to the end of Meg's response and play it from there.
And one of the things that I think is really attractive is the fact that as we think about selling this LNG, we can sell on multiple different indices. So much of the offtake from the US now goes into Europe, where it's attracting TTF pricing. You can go the long way around to Asia, where you can attract JKM pricing. But we've also got the ability to contract against oil indexation. And if you look at the chart on slide 13, that gives you a flavor for the variability that we see within those three indices and how having LNG exposure on all three indices allows us the opportunity to capture the market at the point in time where one index is out of sync with others.
Okay. I guess one of the big strengths that Woodside has is you're very much an engineering company, right? I don't think anyone can argue that you're an absolute tier one operator of your assets. And yet, that integrated model from reservoir to customer, if you came to us in equity markets with a deal of that model, we would have a lot of faith in your ability to achieve a 12% IRR. But what you've just described around capturing arbitrage, your historic returns in LNG trading, still, I just don't think that bridges the gap between the infrastructure-like return and the 12% IRR. Do you not think that there is more risk in achieving a 12% IRR with driftwood than, say, a legacy-style commercial model of reservoir to customer?
I don't, James. And, it's there are different types of risks in each type of development.
I really just love it when, a company announces they've acquired something and the research analyst is like, I don't believe you're going to get the returns that you're telling me you have to get in order to pursue things. Like, prove it to me.
Yeah, that sounds like they chewed a couple of Dexies before that.
I think that's Trav just listening on 1.25.
I played him up a little bit.
I assume that was the case.
And look, Woodside's been smashed 5% since announcing the deal. That's nearly $3 billion of market cap. That so the market's a bit sus too.
Jeez.
The third one I've got to play for you guys is Lynas, the mighty Lynas. This was this morning. It's pretty funny. Lynas's business is looking a bit challenged at the moment with the depressed rare earth pricing environment, and JD's going to get to it too. They've got this hefty valuation that's going to take some real backfilling. And the research analysts, they're constructive, right? When you've got some valuation to backfill, they don't want to downgrade the stock too much. So they're even asking Amanda Lakazi specifically for areas of potential value uplift.
Amanda, first question from me, just on the heavy rare earth announcement that you made a while back. Is there anything you can do or say to help us quantify that, the revenue uplift, and give you some value for it? That's my first question.
Not really.
Thanks, Amanda.
Honest.
I had to play that one back. Did I hear that right?
Honesty is the best policy.
All right. The fourth one, short and sharp, but this is Whitehaven. So MD Paul Flynn from Whitehaven, he wasn't shy to express his views on the New South Wales coal reservation scheme.
New South Wales domestic coal reservation scheme, thought we just noticed that. Sounds glorious as a scheme. It's actually a scam.
Anyway.
Good hunting, Trav.
Some highlights. You get a laugh every now and again, not very often, but sometimes.
It's funny when they go off the terribly boring scripted bit at the beginning, and they
Mate, that was actually the last one with Paul. That was in the beginning.
Yeah,
that was a scripted bit. He'd written it.
I think he went off script for a brief moment there.
I think we've been an inspiration. MD CEOs out there, just be yourself.
Yeah.
Be yourself, you'll get rewarded. I bloody love it. Right, Ora Banda. the new bloody, you'd say the mid-cap gold market, darling, 750 mil market cap now. Whew, bloody unbelievable. We'll see if she's got the, what's driving that? Because far out.
Down today on the spark chart though, Matty.
She's bloody down 5% or so on today's quarterly. So I'll go through it. There's bloody, and again, I've gone down holes that I wasn't asked to, but bloody, it's what we do. So they just hit the bottom end of FY24 guidance, produced 19,000 ounces for the June quarter. So they attribute a loss of 2.6 thousand ounces to rainfall in June. So all-in sustaining costs, again, very high at $28.78 per ounce. So
that exceeded cost guidance, right?
Considerably, yeah. So based on the calcs of what the rainfall, the ounces they lost and the processing costs, around about, I'd say the rainfall may have added $100 an ounce to the all-in sustaining, to the processing costs, around about that. They had 3.9 million for open pit demo because the open pit's finished there. So 3.9 over the ounces adds about $200 an ounce all in sustain. So it still would have been higher than probably what they were guiding for anyway. So the carrot is dangling, but as always, June production was at the required run rate for FY25 as stoping started ramping up at Riverina. So, buddy, it's just a growth story, boys. It's a growth story. So that's at about 50,000 tonne of production. So that's your stoping and development ore. So that's obviously 600,000 tonne per year predicted around about to come out of the Riverina underground. And we'll come back to that. So, and they actually said 94,000 tonne of the ore mined for the quarter. So over half of it came out in June. So it's the stopings. I think last quarterly we said they should be starting to stope midway through. So they're getting there. So you look at the chart, you can see what's happening. Grade and ounces are heading in the right direction, as you can see, but still haven't made money operationally yet for a quarter. So, and open pit mining has ceased, which obviously did not make money prior to that when they were throwing it through, but kept the mill going to avoid care and maintenance. I'd say that was the purpose of it. So, bloody pictures everywhere here. So looking at the waterfall chart, the old Westfarmer JV proceeds that thing has just been an absolute gift from God, that thing. So 16 mil, the final 16 mil of that deal came in this quarter. So that bloody pretty much saved them again. So I think they had 10 before that. So bloody considering the state of the lithium market, very handy getting money for lithium at the moment, technically. So, and they did repay $7 worth of debt to Hawke's Point with another 4 mil scheduled to come out the next quarter, which will be the final 4 mil of debt.
And then they'll be debt free.
Yeah. Okay. Yeah. And they also had to resolve that historical dispute with Greenstone over the nickel rights. So that cost another bloody 4.5 mil as well. So attributed them as one-off costs. So, but remember, they raised 30 mil in March to fund the development of Sand King.
Yep.
But look, it appears that a lot of that's all been chewed up because they had 19 mil at the start of January. So they raised 30, got another 16 from Wesies, take off the 11.5 for debt and legal disputes. So that's 34.5 in the door, but cash has only gone up 7. So obviously they're still spending.
They spent some of that on
Riverina.
CapEx though.
Yeah, a lot of that's in Riverina. Then it's going to start going into Sand King. So because they're guiding for growth CapEx for FY25 of 63 million.
Yep.
So 39 of that's for Sand King, 10 for Riverina. 5 mil for a mill upgrade to 1.4 million tonne. So that's an interesting one. So it'd be interesting to see if that happens this financial year, if it gets tight or if it gets pushed out, or if they're planning to use this hefty script for neighbouring projects for a bit of feed. Because
do you say that because they're 1.4 million tonne per annum? You kind of think at the moment, if their underground strategy, they might actually be feed constrained at certain times. So you wouldn't be upgrading the mill unless you've got other sources in mind? Or?
Yeah. I'm not sure. I'll go through the ton. It depends how much. I know Sand King is going to be bigger. Like it's a bit bigger widths. It's not as narrow vein as Riverina, so they might actually get more tons out of that. It is being trucked to there. So they might get a bit more tons than the 600 planned for Riverina. So might fill it. Not sure. I'm sure they know. But yeah, don't know if there's any bloody plans of M&A or like there. I know there's a shitload of exploration stuff to do on their tenement, and because they've put 25 mil towards exploration for the coming year. So whether eventually progressing to a third operation organically, who knows? Who knows? Got to be bloody God when you got a 700 odd mil market cap, bloody flick a bit over there, get a bit of that back, bloody who knows? 9 mil for an airstrip. 4 mil for debt repayment to Hawke's Point. So that's 100 mil that they've got scheduled to come out from operational free cash flow, you'd say, because they've got 26 in the bank at the moment. So if they're going to leave $10 in the bank, that's 21 mil of free cash flow required per quarter to see them avoid having to raise more equity or get more debt.
Or they just use the exploration as a bit of a buffer, and maybe they taper that back.
They could dial that 25 back, maybe push forward the mill upgrade. There's levers to pull.
Levers, yeah.
Like Chris, levers to pull. So
yeah. They could also put, if they wanted to, and it looked like, so they're paying down the debt. Like it's kind of getting to that point now where if they wanted to, they had the mine plan to defend it, and they could avoid raising it by putting some debt into the capital.
Yeah, refinance, get another $10 debt or something. But who knows? So plenty. Yeah, it's things that, like, if you go by their guidance, and remember, this is guidance looks great when you read it. So, like, say if gold sits at $3,600 an ounce, they hit their all-in sustaining cost guidance of around 2,100. So, and they hit their 100,000 ounces they're predicting. That's about $150 to play with. So, if that all goes well, they will be able to fund all that Sand King CapEx, Riverina, and everything they want. But everything has to go right for the entire year without any unexpected hiccups. And that's Mother Nature's an unexpected hiccup.
Yeah.
Yeah.
And that's just your all-in sustaining costs. There's costs outside the growth capital.
But that's what I mean. So all-in sustaining costs.
Yeah.
Yeah.
The difference between that and the gold price, that's what they've got left to bloody play with for the whole business.
Yeah. Yeah.
Yeah. So 100 for all the CapEx and then corporate stuff as well. Like that's getting pretty close to the 150. So they probably could scrape through with it. Gold might go to 4,000, fuck knows. And I think, pressure on to fill the mill, I'd say, this year. So I think they got some backup. So because open pit mining ceased, Riverina needs to maintain that 50,000 tonne per month, which they got. So that's 600,000 coming from Riverina. They got 200,000 currently sitting in surface stockpiles. So there's 800. They're guiding for 1.1. So they need to get 300,000 tonne out of Sand King by the end of financial year. So I think they're starting development end of the year, going to be stoping in probably the March quarter. But I think they do have some backup stockpiles that are a bit sub 1 grand or something that they
lower grade stockpiles
could put through that I don't think are in here. That's what I've heard. But so they should be able to keep it filled. Gotcha. You obviously want the bloody underground high grade stuff because that's where the whole model they're going for is these two undergrounds to lift the bloody grade so they can start making some cash. So it's
a bloody open pit, get rid of that strategy, go underground. You're all about it.
Oh, mate, fuck, it's what I do, mate. What I do.
Or jumbo operators.
I'm washed up, mate. I bloody never was now. More interested in bloody 5B reports now. So it's, as I said, it's one of those ones that everything adds up on the guidance, all looks good, but a lot of moving parts to keep in order for 12 months to execute this. So the thing on their side, and I'll bring up the pictures, is just probably mine simplicity. So shallow, so pretty easy to ventilate because you've got 1 decline for Sand King, 2 declines for Riverina, which sort of look like they're along the same strike. So that's simple. No paste or cemented rock fill, just simple top down with pillars. Vertical ore body for Riverina, so dilution should be easy enough to control. You haven't got bloody things laying over. So, but all that's going to help them, but it has to go right for 12 months. And it's a pretty hefty valuation that I think it's time to be fulfilled.
Yeah, it's pretty interesting. I mean, on the numbers, if they hit the targets, like you said there, Matty, they could, being somewhat generous and giving them the benefit of the doubt that they'll hit those numbers, maybe make $30 million in free cash flow over the coming year, and they're valued at $800 million.
Yeah, I think
What's that?
You described it as a bit of a turnaround story, right? And it is, especially when you look at the price chart. But I think baked into normally a turnaround story is kind of you have the kind of the cash flow almost leads the share price in some ways, and then the market believes the story again. But in this case, you had the market believing the turnaround before the cash flow kind of transpired.
Yeah,
and I think that I think baked into that valuation is a belief that the exploration drill bit will also kind of backfill a fair bit. They'll have more ounces continuously kind of feeding the mine plan via the investment in exploration that has been absent for the vast majority of the last decade.
Yeah, and I think they're very similar to Genesis in terms of how the market's looking at them. They're looking at, right, if they can execute FY25 growth capital wise with operational, if they can make it happen without raising, look, and they fucking, God, wouldn't you could, if they raise 20 or 30 bucks at a friggin' 800 mil market cap, it's not that bloody dilutive.
Yeah.
But like it's heading towards that FY26 that they're guiding for, trying to get to that 150,000 ounces at sub 2,000 all in sustaining. That's when they'll be bringing in the chocolates.
And then the index flows, and then it's off to
I
the
think
races.
they're scheduled next to go into the indexes, actually.
300? Or is that the GDXJ?
GDXJ it would be. Yeah, I think they're next in line, or did hear up the road in the office. So, but yeah, as I said, it's always good to see a potential turnaround of a shithouse historical project that's burnt a lot of bloody people into a bloody profitable mine. So good job. But doesn't mean that you shouldn't be getting CRE insurance just to insure everyone and everything anyway, based on that history.
Especially an operation like this one.
Oh, mate, CRE could go site visit. Well, CRE could insure Sand King.
Yep.
They can get that sorted. Burn Cut's out there.
Can insure that.
Mate, Steve Coughlin, if you're listening, go give CRE Insurance a ring. So, because Burn Cut turned me into a man. Like, there's a special place in my heart. I wouldn't want to see anything happen to them if I could have done something about it by getting CRE Insurance involved to protect them. I wouldn't be able to sleep at night. So, look, mine owners, underground contractors, open pit contractors, drillers, just bloody anyone that provides a service to this great industry, give CRE a buzz. It's tax deductible too, probably, so it's pretty much free.
Go CRE.
So, yeah, fucking, yeah, very good.
Making sure people don't get burned at Davey Hurst again. Good on you, CRE.
Yeah, God, that's
God's work.
Sorry. You always wonder, but if and I'm sure as hell hope it's all lining up to be bloody executed, and I pray it all does, but you're like, what the fuck was everyone else doing there? Not drilling it properly or something, but yeah, it's don't know, gold price is different.
It's a bit better.
Costs are going up, but I don't know, but good on them.
Trying to get to that scale.
Yeah, just Anyway, there you go. Go underground.
All righty, should we have a bit of a chat about our rare earth champion?
Oh, the incumbent JD.
Linus.
You're going deep, brother.
Yeah, I kind of have. Yeah, so we'll start with the quarterly.
It's got a migraine after reading all about it, mate.
Yeah, killing me. So, no secret, the rare earth market is at a bit of a low ebb, you'd sort of say. TREO production down 40%, and doesn't help either from Lynas's perspective, and focusing on NdPr, that was down 13% this quarter. So a few things not going in their favour. Lynas pointed the finger at a couple things. They said global shipping sort of cooked them. A couple shipments didn't get out on time like they should have, and then they had a bearing failure up in Malaysia, which impacted one of the kilns, which meant there was maintenance for over a month, which kind of obviously hits your output at the end of the day.
You said like a bear went in there. Like a bear in the kiln.
Bearing failure.
Oh, right. Yeah.
So average NdPr prices. I know you've looked at these, Matty, in recent times. You like to keep a bit of an eye on them.
Yeah, mate. I like to keep up to date with all the prices, mate.
You're
you
all
never
over
know
it.
when there's an opportunity, JD.
Well, you would know then US $42, which is what these guys realized for NdPr, is not a good price.
No. And I think you see it quoted on the net. I think that includes the VAT. I think you'll see it.
So that one I just mentioned there is what they received excluding.
Yeah, they report excluded.
Yeah.
So you see if you Google it, it comes up as like 48 or 49. I think that's including.
Yeah, and I'll flash up a couple prices here. You can see for NdPr, and you can also see for a couple others, DY and TB, just trending in the wrong direction. To your point, Matty, these are all VAT excluded. But I mean, just zooming out there, looking over the past couple years of quarters broken down, they're all kind of hitting lowish points. So it's certainly not the best time to be in the rare earth market. And Lynas have got a lot going on, obviously. So Mount Weld expansion. We've spoken at length about Kalgoorlie in the past. They're trying to ramp that up. Malaysia, they're trying to get a new heavy rare earth circuit going. Then they've got what they're doing in Texas happening as well. So there's a lot of moving parts to this company, and it's coming at a time where they're just not making any money and investing a heap into the business. So I thought it was worth just taking a bit of a closer look at the financials.
Well, on the price, JD, is it like, would your macro genius perception of it be?
I'll call myself a macro genius.
It follows electric vehicles supply and demand? Is there a simple thing to attribute why the price is down?
It's nowhere near as tight as the likes of a lithium to battery applications. It's just not a normal market. China has gamified it for so long. Players didn't need to make a profit. They just wanted to dominate the market, and they did. They put everyone, around the world out of production over the space of many decades. So it's just not a normal market. And you can see, there is some correlations with lithium, like the demand has crept higher and higher year on year, looking out over the last 5 odd years or whatever. But the price the last couple of years has really pulled back, which is something we've seen in other battery metals. But we talk about lithium being dominated by China. Rare earths is
super dominant.
Exactly.
Well, they've got all the downstream
and
over half the actual mining of it. Of rare earths.
Yeah.
So that's how fucking powerful they are. So hence the push to ex-China rare earths.
Exactly. So that kind of leads into a chat about the
Trying
financials.
to rip it out, that would have been good what you're about to say.
I was just going to say, rather than think about EVs, think about wind farms as well, and how the world's kind of recalibrated the expectations of what that can do to the grid.
Mm.
Yeah. So looking at the financials and then the valuation on the back of that, these guys earned $460 million in sales receipts over the financial year. So we're talking about the top line here. Costs, production, admin, royalties, taxes, these sorts of things, leaves about $60 million in cash flow. And that doesn't mention a bit in financing. They've got a bunch of cash, but they've got some debt as well. So they're paying debt and earning interest on the cash that they've got. And then there's a few other sort of costs. Meanwhile, they spent $580 million on CapEx, exploration, and development. So that is
for the quarter.
For the year.
For the year.
For the financial year.
Yeah, gotcha.
So that's a bit out of whack, and it only works while you've got a massive pile of cash, and then you've got government grants and funding and investors really backing you. So they started the financial year with a bit over $1 billion and ended it at $520 million.
Wow.
It's
pretty beaten up, and it's. I mean, I just looked. It's the 10th most shorted stock on the ASX. 9.3% short interest.
Short.
Short. A lot of
Real
people are
short.
A lot of people are very short. So I want to ask a couple of questions about this one. The first one, which you kind of posed earlier, Trav, is are they going to need to raise cash? And it seems on the surface like maybe it's a bit of a crazy question, $520 million. Certainly if there's any other company we tend to talk about that's holding that much cash, we're not talking about capital raisings. But I mentioned that CapEx, they're spending heaps of cash. And, this quarter alone, that would have been worse if they didn't pull in $33 million in a government grant. They've got big ambitions. They're advancing industrial projects all around the world, which come at a big cost. So looking at the estimates on the cash flow side of things, seeing if they can fund these, in terms of revenue, the consensus is that they'll have $1 billion in the coming financial year and $1.5 billion in the financial year after that. At the EBIT level, $300 million in FY25 and almost doubling that in the following financial year. So there is a lot of assumptions out there that the NdPr prices will recover over the coming years, in particular, starting in the second half of the coming financial year that we are now in. And that's a little bit concerning to me. You know, I don't want to invest in a company personally on the assumption that the commodity prices are just going to kind of save me. You know, you want to pick up investments when they're eaten into the cost curve and all these sorts of things, but you want, you know, preferably a company that can still make a bit of money at the bottom end of the cycle, which we'll kind of get into, because then you've got the other assumption being factored in is that they're going to smoothly increase production. Like I said, all these facilities that's coming, and Mount Weld is going to expand production. This year they did about, you know, a bit under 6,000 tonnes of NdPr. That's going to go to an interim target of 9,000, on its way to 12 in a couple years' time.
It's about double Mountain Pass, I'm pretty sure. I think Mountain Pass is about 6. So I think Lynas are about double what they're going to put out. Pretty sure.
If you're comparing a couple of years in the future, what they're going to get to. Yeah. So
do you think, JD, are they going to, once the CapEx is spent, do you think they'll make money at the bottom of the market?
Depends how low the NdPr prices go. If you're calling this the bottom of the market, they're breaking even.
Yeah.
It's good that they've got a cash buffer and they might not have to raise. I'm sure they could just get a bit of debt on board. But the CapEx point is an interesting one, because Amanda said in the call today, we're coming at the back end of a heavy capital investment cycle. But you look at all the analysts and we're talking like consensus next year is over $300 million to be spent. Certain analysts are saying over $500 million and hundreds of millions, you know, the year after and the year after that again. So are we really at the end of the cycle, or is there going to have to be, you know, more CapEx sent? And you're working on all these different things. It increases the risk of CapEx blowouts all around the world, you know.
Watch the price targets of all the broker reports, because fuck me, they'd love a good relationship if they were going to raise, because it should be a big one.
Yeah, I don't know if I would say a raise is my base case, because they've got opportunities to capital recycle if they wanted. They could, you know, sell down a 49% interest in like some of their key infrastructure in Malaysia if they wanted to another party and still maintain control. They got options like that, or they could get some concessional funding from government for being a critical mineral and all that other stuff. The thing I do worry about with, and I don't like, I've got no crazy insight onto the rare earth market any better than anyone else, like probably less. But I just, in the back of my head, I always just keep thinking like, so what is it, a $5 billion market cap higher? 5.6 billion dollar market cap. The thing that worries me is like, if any of those like ionic clay rare earth projects are like, if the economics of them actually kind of, if the cost basis is what it's portrayed in some of these early kind of pieces of analysis, that kind of monsters, like that comes in lower on the cost curve than Lynas. And you displace, you know what I mean? You displace things that are higher on the cost curve if that stuff's real. So yeah, I just worry anytime you have like new potential production come in lower on the cost curve than your incumbent production. Well, that's what happened with Nickel West and all the West Australian nickel. That's what happens. That's what has happened in uranium back in the day with the Kazakhs ramping production. Stuff like that is a possibility in the medium to, you know, in the medium term. In this
and
industry.
I think the iron and clay, I think what Meteoric were going to pump out, I think 3,000 tonne of NdPr.
I think that was right.
So they are, and I probably need to understand more the scalability of those clay rare earths if they can get to something like this, a 6,000 to 12,000 tonne, if they could actually really impact the market, considering Lynas is not. Like considering China is over half the global rare earths, how much impact those clays being injected into the market would affect the supply and demand dynamics? Not sure.
Yeah. I mean, there's a few sort of facets to it, because that is at one end. That's the mining end. And obviously the processing is very difficult, and that is an area where Lynas have built up a lot of experience. So that kind of leads into how you think about valuing this company. And there's some pretty heavy hitters on the register. I mean, we know Gina's on there. That's pretty public. Oz Super, Challenger, Ausbil, Green Cape, these guys all own a couple $100 million plus. Now, we're at the low point, like I said, we're near a low point, you'd think, in rare earth kind of pricing, and that would lead to multiples looking pretty stretched. So that's probably not the right way to kind of look at it. You are seeing brokers doing the old tricks of blending NAV and multiples where they're using earnings 3 years down the track to try and get a more normalized valuation of it. But it leads to the kind of question, should you think about it a bit more like an industrials business and maybe using a multiple is a bit fairer, given the operational facilities, they're doing a very value add process. It's not just like a gold processing plant. They
don't have a life.
Yeah, and they're talking about potentially getting third-party offtake and just processing that, which they maybe down the track could do, hypothetically from the likes of a Meteoric or something, because it's that next step where they can value add and earn a decent margin on that. And that's a real differentiator. So that's why I don't think you should look at it like all the other mining companies that we kind of do and shouldn't be undervalued. The problem is a lot of these projects are struggling to come online at these NdPr prices, which makes it a bit of an exercise trying to value what they've got in Malaysia and the expertise if they don't actually have any feed to put through it.
Yeah, no, if they set up this ex-China rare earth supply chain that, your clays and that feed into, and they've got a bit of control over it, they then become the big player that's reaping the cash out of it. An old Meteoric of flicking away double-digit percentages in payabilities to these mobs that are processing it for them.
Yeah. So they've kind of made a decision, at this point in time, to not retrench and lay off people at Mount Weld, keep it operating even though they're kind of breaking even. And, probably worth touching on the merger. Like, that's not going to add any premium when you're thinking about valuation because, that might happen. If it happens, it's a sort of merger. No one's going to be baking in a takeover premium into
Lynas materials.
I think there's value uplift from a nil premium merger just from a market consolidation perspective. You have like a monopoly in the West in some ways.
Yeah.
You can charge a higher price to whatever, customers.
I think you're kind of right. I wouldn't be valuing like a lot of people do though, a 30% premium into that at all just to address that
Lynas might even
kind
be
of point.
I don't know.
So to kind of tie it together, I think it might be surprising for some people to look at the NAV and see Mount Weld is only 10% or so of the net asset value of the company.
Oh, really?
Yeah.
Wow.
So that kind of might take people by surprise a bit. Other people value it tying the whole thing together, like an integrated rare earth processing, operation. But a huge amount of that value lies in what they've got in Malaysia there. And, hopefully they can sprinkle some of that IP they've developed into Kalgoorlie and into Texas, but there's some sort of structural headwinds, higher operating costs and stuff at those facilities. So you've got a solid kind of mine in Mount Weld, but it's a small part in the sum of the parts. It doesn't really make money at the bottom of the cycle, but in a normalized price environment, it should make a bit of money. But like I said, Matty, it's not a normal market. You don't know kind of how long these things go on for, how long there's, spells of weak pricing. And, you kind of come out the back of it with things looking pretty stretched at the moment. But I think it's, in a sense, right to attribute a premium value for the industrial aspect of the business, but I wouldn't want to go into an investment thinking, hey, I might need the government to help me out a bit here. You got a lot of tailwinds in China, a lot of headwinds in China, and that could go on for a long time, like it did from the 90s, 2000s. So it's sort of on a bit of a shaky foundation.
So when you zoom out, like, do you kind of sympathise with the bulls or the 9% that are short at the moment?
Probably sympathise with the shorters a bit more. I think the government aspect to it adds strategic value, but I think of that more as support on the downside as opposed to adding, additions to a multiple or expanding the NAV. And, like I've always sort of thought with rare earths, probably since we had DK on, it just goes in the too hard basket.
Yeah, I think it's like an amazing things happen to this stock every kind of whatever 8 years or so when you just have these fly ups in pricing because China changes their policy on their own internal quotas or whatever. But yeah, I think you have to read the tea leaves a bit on what's happening in China before you can have just your outlook on Lynas specifically, because it is when you talk about markets that have so much influence like this, it's like this is as much as it gets.
And our governments have spent so much on rare earth projects.
It makes you just
there's a real chance
squirm,
that there's a change in government or something, and they're like, enough's enough. We need to streamline our focus or something on this, and we're not going to be as outrageously supportive. I don't know, just another risk on the downside, you'd kind of call it.
Especially when they're proposing to build bloody 5 nuclear plants. The new one. That's where the capital will be going. Right, Mac, the X-SPAC.
The X-SPAC, yeah.
Mac, the X-SPAC. Metals Acquisition Limited.
Good quarterly.
Impressive quarter for Mac. And the market liked it too, mate. The spark chart's up. They say operational free cash flow US $21 million for the quarter. C1 costs of $1.92 per pound of copper US dollars there. And they mentioned on the call that, in the months of May and June, sort of specifically where there was no shutdown, that C1 cost was closer to US $1.50 a pound, where they kind of envisaged maybe that's what they aim for kind of run rate to be, which is an impressive kind of cost basis, given people have kind of knocked it. Yes, it's high grade, but it's deep and all that sort of stuff. So there's definitely some turnaround kind of operational activity occurring here, which is really positive. And there's consistency kind of happening now quarter to quarter. I like their calls. I'd like to tune into the analyst calls. I always learn something a little bit about mining.
There you go.
Calls, Matty. And there's some like recurring themes. Like they kind of, when they talk, they keep themselves accountable to these, these goals that the organization has, and they always come back to them. So you just know what they're about, and clearly that's like messaging that's goes down into the business as well. June quarter was a bit of a record, up 24% on production from the prior month, producing 10.9 thousand tons of copper. And big improvement in their reporting too, Matty, JD. I'm very happy with the waterfall chart. Well done, Mac.
It's got numbers on it, mate.
Operational turnaround and also a reporting turnaround.
Waterfall turnaround.
A few other charts I quite liked in the materials today as well, gents. Number one, this slide here I thought was pretty cool. It speaks to some of those operational optimizations that they've implemented versus kind of when things were being operated by Glencore. So it just shows like you can have some minor optimizations and they can have a big impact when you compound them all. But you look here, right? They reckon they've been able to improve their mining rates, not processing rates, but mining rates from 1.1 million tons per annum to 1.4 million tons per annum without any additional capex, just by changing two things. One is increasing the load size from 52 to 54.5 tons per load, and the other one is increasing the average quantity of loads per day from 62 to 72 loads per day. So I thought that was pretty cool. You can, it's quite a meaningful uplift when you think about it, but each of them is, just a kind of minor tweak. You're optimizing things. You may be getting your sequencing and all that sort of stuff like better.
Yeah, I don't know. Yeah. I wonder if they put I didn't read it. Yeah. I wonder if they put more trucks there or just increase the just the bloody
productivity,
getting them down the hole.
Yeah. The other one I liked was this. So you look at the development cost per metre drop 40% quarter on quarter. Look at that. Now, they provide some commentary on why that is. I've highlighted it. They say it's due to more rehab meters, which weren't included in the unit rate, and pivot to the new mine plan that requires lower advance rates. That's what they say. That's why the development cost per metre is lower. But I reckon the real reason is because they started using DSI ground support.
Is that confirmed?
Don't know, but that's the only thing in my head.
That's
because you get better output for dollar spent with DSI.
The bolts just going quicker,
and you're ground safe,
and they're stiffer. Like they're just better. They're better installation, better quality. Like it's just, I don't know. When I say better quality, I don't know who else does ground support besides DSI. It's like I don't know who does insurance other than CRE. Like they're I'm that tunnel visioned on DSI being the only option and the only call you need to make. So, and I'm pretty sure you're on the money there, Trav.
Yeah, if you look at the footnote there, called Derek Hurd in May of the year and got DSI, and there you go.
Yeah, there you go.
I think you really summed it up well. It's just better.
Good on you, Derek Hurd. Bloody wonder if he's got any job offers from NextGen yet. He was bloody saying, where do I send my CV? Oh, mate, go DSI. Good work. Go Mac, the SPAC. Are you still thinking something's going to happen with them to someone else or someone else to them?
There'll be a deal at some point. It's in the name. Yeah, I don't know what.
Do you think they go overseas?
I think anything is possible. I think like the biggest value add they can do is just massive kind of operational improvements, continue this trend, have consistency, delever the balance sheet and all that sort of stuff. They did mention the polymetals thing. So I wonder how when that happens, what kind of operational benefits they'll get with the zinc and all that sort of jazz. Yeah, will they go overseas? I don't know. I think there's opportunities in Australia that you could look at, but yeah, Mick's obviously kind of run a company that has international operations before.
Yeah, and it's just copper. Like CSA is that. I think who'd we talk to it about? Like DeGrusser. Like when you got the high grade ore body, you can't just go and find another one to try and not dilute. You're gonna whatever you take, you're gonna dilute a bit in the quality of the project because they just don't exist unless they. Well, Rex's appears to be out of the equation now unless they go for an open pity sort of one.
Yeah, well, I don't know if they'd really want to build a mine, to be fair. I mean, like you'd kind of rather acquire something where you can apply your operational expertise and get, incremental improvement day one rather than go through that whole grind of financing, building and all that sort of stuff.
Do you reckon they're going to stick to just copper?
I think that'd be the first place they'd look.
Yeah.
They've operated Mick's operated in Africa, so could be, there's something I guess they'd look at.
Yeah.
Develop, mate. Woodline. Don't know.
That's it's pending that one. Developed $1.90 today.
Cobar's the obvious talking point, right? And everyone likes to throw Aurelia in the mix there.
Yeah.
I think it makes sense.
I know, but like they're talking about the likely outcome is there will be a chunk of Woodlawn sold, but would that be beneficial for Mac to take a small stake in a project? It'd be more beneficial for a POSCO or like a South Korea or Japan downstream to take
someone that wants
something with an offtake. Oh, you just never know. It's like they're bloody smart, these MDs and CEOs. They always think of shit we don't.
It's true.
Unbelievable. Anyone think they do it all day. Right, Spartan. Jesus, look at the spark chart. She's flying. She was up bloody 20-odd% today. Hey, I told you yesterday in me pod, if I had it, if bloody Bondi gave it to me, I would have bought it. So I'll be up. Bondi, again, you've lost more money because you didn't give me money.
Ding, ding, ding for JD.
Oh, yeah, JD.
Ding, ding, ding.
It would have been ding, ding, ding if I had my fund. Yeah. So MRE update today. 1.5 million ounces at about 8 grams a tonne for Never Never, 58% indicated. Another 440,000 ounces at 7.66 grams a tonne for Pepper, 100% inferred. But so all of Dalgaranga is now at 2.5 million ounces. 4.79 grams per tonne. So, mate, as I said on the spark chart, she's up 20-odd%. So she's flying. Gee, she's getting expensive for Amelius. Jesus, holy snap and duck shit. Bloody $1.20 without a bid. So now I'm possibly hanging myself here in front of the geologists, but these looking at this table here, I'll bring it up. The headline figures have been reported as a in situ at a cutoff grade of 2 grams per tonne. So that's like this big, Never Never look like 8-odd grams a tonne resource. Looks flying. But if you look at the MSO defined Never Never Pepper combo, it's a bit below 6.32. So it's a bit below 2 million ounces at 6.32 grams per tonne. So it's about 2.3 grams per tonne lower than what is reported in situ at a 2 gram per tonne cutoff. So the MSO has a 1.2 gram per tonne cutoff. So
MSO means what exactly?
Mineable shape optimizer. So an MSO shape is what they pretty much run through a bloody geological model to say, like, right, if the cutoff grade is 1.2 grams per tonne, based on these stope mining width and height bloody parameters, how many you have to create a shape that is
mineable
above 1.2 grams per tonne total based on the parameters set out.
Gotcha.
So it rips through and makes all these shapes, and then that's what feeds into your resource. But the in situ numbers, so that's the MSO shape gives the and then it takes away the waste outside the bloody vein itself. But that'll give you all the material within that MSO shape. But then the in situ numbers take away all the material below that cutoff grade, because within that MSO shape in the vein, you might have material below 1.2 grams, but it's included in the total grade of that MSO shape. But the in situ numbers take away that material that is below the cutoff grade. Hence why you can see here the MSO shape tons are much bigger than the in situ, because it's including everything of the vein within that shape. So in terms of realistic mining, what happens is the MSO shapes are will be practically smoothed for mineability, add a dilution factor on the outside, and that's what goes into the reserves. So, but they might not take some stopes that are a bit over, like say if the MSO cutoff is 1.2 grams, and so you got an MSO shape that's 1.3 grams total, they mightn't actually mine that shape in the reserves because it's 1.3 grams. They might, if it's bloody there, you may as well take it for extra tons. So I think the in situ reported grade for Never Never and Pepper of 7.2 grams a tonne at 1.2 gram cutoff is probably a better reference to go by than this 8.65 grams per tonne, because that 8.65 is saying that within those MSO shapes, it takes away anything below 2 grams per tonne in the calculation. But practically, if it's at the bloody bottom of this thing, you got to take it anyway when you actually mine it. You can't just pick and choose which part of that shape to take usually. So I think as a representation of to think what this might practically turn into in the reserves, probably looking at that 2 gram per tonne cutoff grade in situ is probably a bit elevated.
Yeah.
I think.
That was in the detail.
I think. So, look, even the 6.32 grams per tonne MSO resource is bloody high.
Yes.
So, good headline, but think practically sometimes. So, once you convert it into reserves. So, happy to be corrected there.
Mate, you just
especially when geologists run the company, I'm sure it'll be.
Yeah, but you look at an ore body, mate, and you're just like, I can mine that stuff. I can mine that.
Yeah, well, that's what an MSO shape is effectively. So I think there's a bit from. It's not saying that the MSO is the grade, because there's some of that might not be taken. So I think it's somewhere in the middle.
Yeah,
is what I'm getting at. So
regardless, I think that grade is what exceeded the market's expectation, right?
The headline gauge, yeah. So it's always the thing. It'll be it's always interesting to see what the reserve conversion of that, if that in situ 2 gram per gram. 2 grams per tonne cutoff is converted into reserves. But the thing they have on their side for resource to reserve conversion is the thickness of the ore body. So when you can apply a lower percentage dilution factor or width of dilution on the outside, which lowers the grade a lot less compared to, say, an Ora Banda, which is mining a vein but has a minimum mining width of 2.5 metres. So your resource grade considerably goes down when it's converted into reserve. So that's the thing on Spartan's side. So all in all, there's some bloody gold there.
Yeah, it's pretty remarkable how strong the reaction has been both times in the last half year that they've come out with the updated resource. The market has, it's exceeded the market's expectation both times. And, you would never accuse them of being short on advertising or, kind of telling the market, we've got something big coming, yet both times it's sort of exceeded expectations. I find it kind of surprising.
Would you like to see a bit more on the Met in this resource upgrade?
There was some info. I didn't bloody go into too much. I did see some stuff talking about how there's some black shale areas that had recoveries of, I think, 77%, but it was less than 15% of that area. I think that was talking about the Gilbey's bit or something. So that's more I wouldn't expect for a mineral resource is a mineral resource.
Yeah.
But that might be the next stage of mineral resources where you need more stringent metallurgical stuff to release a resource. But that is the next big stage. You can't say they're short of drill core to
that's what I mean.
feed into some metallurgical testing.
Wouldn't like Stuart has said, we're cheap. I remember him saying we're cheap.
He would say that.
Yeah. But I just would have thought you got a big bloody why don't you just allocate a couple $100,000 and just do a bunch of met testing in different parts of your deposit when you've got this big discovery, and just give the market confidence that, I mean, obviously why is met important? It's because Gilbey's didn't have tremendous recovery, especially towards the end of its life. It was pretty damn average. And of course they talk about never different structure and all that sort of stuff, but you just want to see more work there.
Wonder if they're going to do a study. Wonder if the timing of that study is pending a acquisition. Wonder if they're going to not do the study and hope Ramelius takes it first, or do the study, or Ramelius is going to wait for a study to come out. But the bloody rate they're growing the resource, and if they find any repeats, they're going to fucking have to keep paying more money. Yeah. So I think she's a bit of a juggling act there.
I think that high grade has alleviated plenty of concerns on the Met front. Not that they're extinguished by any means, but high grade forgives a lot.
Totally, yeah. Everything's got a price though.
Yeah, for sure. I think and you talk about their reaction, JD. It's like, yes, it's been brilliant, well marketed, like well publicised. It's bloody, but it's like there's not much else like it out there that you can attribute as a bloody one of the top ore bodies in the country at the moment. So it's and practically as a mining sense, it's going to look like it's going to be a pretty good bloody mine. So looking forward to it. Bloody go gold, go Australia.
Go Australia indeed, go WA.
Mate, is Joe Biden dead?
If anyone can confirm if Joe Biden is breathing or not, or has he been dead for a couple of years?
Didn't think we were the forum for that.
Walking dead. Yeah. It's just, Trav, are you going down a conspiracy rabbit hole here?
Mate, has anyone seen him? Has anyone seen him? Have you seen him? Where's Joe?
I've seen a lot of deep fakes of him. Maybe he'll just live in that world forever, on the Matrix with Donald Trump. Maybe he's in the Matrix. Maybe we're in the Matrix.
Maybe we all are.
Go either way. JC, what do you reckon? Yeah, we've got another hand up for dead.
I think that's a wrap, guys.
No offence. Why? It shouldn't be taken lightly, someone's life like that.
It should not.
True. You can do the sponsors after.
How good are the
question that?
How good are the sponsors? Axis Mining Technology, Mineral Mining Services, VRIFY, GetWet Solutions, CSI Underground, Silverstone, CRE Insurance, WA Waterboards, K Drill, and Spark Charts. Use them.
How good's the Spark Chart?
Oonaro.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.